I hope I did not offend you with the title of this video, but even if, hey, sorry, it seems to work because it looks like you're interested in this topic and maybe you're gonna learn something you didn't know before. So thank you for being here. Today I'm going to explain why right now is the time to buy a home. I mean, we are clearly, absolutely clearly in a buyer's market, and instead of just asking the seller to reduce the sales price, today I will show you another way how you can take advantage of the really good deals that are out there and don't worry about interest rates. My name is Mike Schaefer with Sally Love Realty from the Villages. Thank you for being here, and if there's anything in this video that you say I didn't know, please hit the like button and subscribe to my channel. Believe me, in my 40-year experience, I hear it all the time during my open houses. People say, oh, it's a nice home, but I'm waiting until the interest rate comes down a little bit more. It is too expensive for me right now. Sadly, about 90%, and I'm not exaggerating, about 90% of all realtors give up when they hear this. Well, not me. I will explain to you how great the market is right now to get the absolutely best deals. Remember one thing, if the interest rate comes down, it will probably result in the same monthly payment for you because house prices or property prices will go up as well. Supply and demand really works for everything. Only there's one little issue: if the value might go up a little bit slower if you buy at a high price. The old rule always applies: buy low and sell high. Today I'm giving you a tool that might make the difference between you getting approved by your lender or denied, because all of a sudden the rates, your monthly rates, become affordable and you will be approved. But before we go into the explanation how interest rate buy downs work, let me go a little bit deeper into the ground rules before you go out house hunting. I'm talking about getting pre-approved for a loan and not only getting pre-qualified. There's a really, really big difference. A lot of people don't even know the difference. And let me tell you one thing, if I'm getting an offer for a property from a buyer showing me a pre-qualification letter from his lender, from his bank or whatsoever, I won't even submit the offer because I will tell him to get pre-approved. And here is the difference. Pre-qualification means you have called a lender and you told them, listen, we can go over that real quick over the phone. My income is probably X, my taxes is that, my monthly expenses is I don't know so sure, but probably around this. And I'm applying for a home, or I'm looking for a home in price range X. There are lenders out there that will give you a pre-approval letter based on just that, people. This is crazy. They haven't seen a paper from you and they give you a pre-approval letter. This is not something you can count on. But if you really want to make sure your seller knows that you qualify for the loan that you are looking for, let's get a letter where you showed your lender, no matter which lender, you showed your lender your paperwork. You showed him your bank statements. You showed him your tax returns. You showed him a little bit more about your expenses. I mean, the bank returns, the bank statements give you a little bit something. And you don't tell them what kind of loan you are applying for. Ask them and say, listen, what kind of loan amount do I get approved for? If they give you a number, you don't have to house hunt for the absolutely maximum amount, but you at least being pre-approved, meaning if you later on apply for that loan and once you found a home, you will definitely get the loan. See the difference? Big difference, and most people don't even know about it. In a few minutes, I will have a one-on-one meeting with an experienced mortgage broker. During this meeting, we will go into detail about how buy downs actually work, but let me be clear. I'm not telling you to use this mortgage broker for your loan. I'm not even allowed to do this. But I am telling you to be pre-approved by at least one lender before you go out home hunting. Don't even think for a minute that your banker, your local banker here from your city will give you a special deal or will give you the best rates and the best loan program just because you deal with them for decades. Not even close. They might not even be aware of everything that's going on out there. So please shop around, find at least one for the pre-approval letter. It doesn't matter with whom you go. It doesn't mean you have to use this lender at the end once you found your property. But get out there, show them your information and get a letter that says, yes, I can afford a property up to this amount. Enough of the words up front, let's dive into it. But let me apologize for the bad quality, video quality that we have with our lender. We really tried to fix everything, but I assume her great knowledge about the different products have impressed her lens and made her faint a little bit. That's the only explanation I have. Let's dive into it and go deeper into the buy downs. Now I'm here with Diana Jones from Primis Mortgage. Thank you, Diana, for sharing this time with me. Give us a little bit some information about who and about the company that you represent.
Well, Mike, thank you for having me, and great to see you again as always. I work for Primis Mortgage. We are a bank owned by Primis Bank. And so we have a lot of different programs, but I've been in this industry for, oh my gosh, 40 years. I don't want to give away my age or anything,
Okay. Okay. All right.
but
We're old timers here in this
I have
business.
been doing mortgages for the last 20 years
Okay.
and absolutely love what I do. And I work for a fantastic company, very supportive of everything that we do.
So, and as I understand, you are an independent lender.
I am an independent lender.
Tell the people what this means, because most people just go to their lender, to their bank that they know, their banker for 20 years, and whatever the banker tells them, they do it.
Well, what people don't understand is, they go to a bank or they go to a mortgage company and do an application for a mortgage. A lot of people are under the impression that their loans remain with the mortgage company or the banks. I just want to confirm all mortgages get sold.
Okay.
They get
Most people
sold
know
in the
that.
market, and you will end up with another lender eventually. But I have a system in place where I interact with my clients. I have customers from 20 years ago that I still am in contact with, that I've done numerous mortgages over the years for them.
So you stay in touch with them and you tell them if something is supposed to happen, you tell them at least what's going on.
Yes, I do. I mean, they get
Okay.
weekly emails from me. I stay in contact with them. I reach out to them periodically, let them know what this market is doing. Some of them, obviously, my customers, when the rates were in the twos and threes, they're pretty much set.
Yep.
But, we're in a different environment now altogether.
Okay. And I mean, how experienced a lender is definitely counts. I mean, just a quick update from my own end. I mean, when I moved over here to the villages, I was thinking about, do I pay cash or do I finance? And I went for someone that says he is an experienced lender. We went through everything. We were 3 days before closing when she told me, oh, by the way, I can't finance you because you don't show a tax return for the last 2 years for the new company. I mean, how embarrassing would that have been if I hadn't had the cash to pay cash for the house? I mean, this would have meant, hey, we're done. The house is gone.
Oh
That's
my
what I
goodness.
understand about an experience and keeping people in the loop, what's going on. Tell us a little bit how your process usually works, how it starts, what people need to do in order to get an approval from your end.
Well, I deal with a lot of retirees. and a lot of them are not tech savvy. So I can take an application over the telephone, which I would just be importing, they're inputting their information as I'm talking with them. If they're able to, they can do an online application. It's very, very easy. I can walk them through it. And then, there will be some documents that are going to be required. I have some clients that are not able to upload documents, and sometimes we have to go the FedEx route or UPS route to request those documents. I've had to do that. It just really all depends on, what they're able to do as far as online. Again, I deal with a lot of retired customers, elderly people, and they are shopping for a mortgage. And then again, I also deal with first-time home buyers.
I'm actually blending in a little bit something about what you require people in kind of information that they need to provide before they can start the application, and that they see what they need to fulfill in order to be eligible for any particular loans. Can you say anything
There's a
about
lot
that?
of there's so many different programs out there, Mike. We have we now started a new thing, and this nobody has this right now. We are actually going to be doing a bank statement construction loan. So I also do
Okay,
construction loans.
that's good to
Nobody's
know.
doing construction loans as far
Yeah.
as bank statement construction loans. It is mainly for, self-employed borrowers that are not showing the income on their tax returns. We can do 12 months of bank statements, and that would have probably come in handy with you not having the tax returns at the time. There's so many different programs that years ago they were not available. There's more and more coming out now. And like I said, we do so many different things. There's your regular conventional, your VA, your FHA, we have the jumbos, we have so many different programs, and there are special programs, even conventionals, that cater to the lower income people. And so there's a lot of programs out there, and just by talking with a client, I can determine what is going to be best for them.
I
And
mean,
the way
that's the way to approach it. I mean, this is the one where they say, okay, once they start talking to you, you find out real quick what they are eligible for, and you provide them with the necessary information, what loan might be best for them.
That's
Correct?
correct. That is
Okay.
correct.
And what's most important, especially to know for people who are thinking about buying a home here in the villages, is that you are nationally, that you can provide, even since you are located in North Carolina, you can actually provide loans here in the villages for anyone who is looking to finance a home, correct?
We are currently financing in 48 states, correct.
Perfect. This is great to hear, because I mean we have a lot of homes here in the villages that are cash buyers, but from time to time we're having people that need financing, and they would be happy to hear that there's someone around who can help them out.
I
Um,
just closed my first loan in the villages last week.
Okay, congratulations. We're working on more. Huh? But what I wanted to talk to you today about is actually something that a lot of realtors haven't really figured out how to do it, because most buyers only come up with one idea where they say, listen, what can we do with the price? Can we reduce the purchase price a little bit more? And this is all they ever think about. I want to share with our viewers here a little bit something where I say, okay, we have one thing where we say, we just take one of my listings and say, okay, the purchase price where they agreed on would be 515,000, which would mean usually a 20% down payment. But you are saying this might differ from person to person, correct?
Correct.
Okay, but let's stay to this example where we say the interest rate, we figured it 2 days ago at 6.375 for 30 years. The monthly rate for a loan like that would be $2,500 and 35, 70, 34 every month for the next 30 years. What we are talking about today is a so-called buy down. And this is something where I would like you to share a little bit your information, how this works and what people are seeing here on that screen.
So basically there's various different options. There's a 3-2-1 buy down, and then we have a 2-1 buy down. So instead of negotiating a price reduction and getting a lower price for a home, you could possibly get your agent, Mike, to get in contact with a house that you're interested in. And instead of negotiating the price, ask them if the sellers would be willing to offer a buy down for you as a buyer. And what that means is, so Mike would go to the seller and say, instead of, I would like to get a lower price on the house, but here's another option for us. For instance, the 3-2-1 buy down would cost a seller a total of $18,305.28, and that was for that $515,000 price point. Okay, and so what that means, the first year, your interest rate would be at 3.375. So instead of that $2,570.34 payment, you're all of a sudden making a payment for the first year of only $1,821.44. So that is actually saving you monthly for the first year $748.90 per month. So
Let me interrupt you right here. Let me interrupt you right here. This is they still have to bring the 20% down.
They still would be bringing 20% down, yes.
Okay, so we're talking about the same numbers. That's just something I wanted to make sure we're talking about the same numbers.
Right.
Okay. All right. Okay.
The second year, you would go to the 4.375 rate. Again, it's still a savings. It's going to save you $513.28 for the next 12 months. And it gives you the total of the annual subsidy. And then the third year, you would go to the 5.375. And obviously the payment goes up. But I also want to point out, so what happens, let's just say a seller agrees. Your seller agrees to this buy down, and the seller is going to pay for it. So the seller has to pay for this. The cost for him would be $18,305.28. So the benefit to the buyer is lower monthly payments. Okay, that money gets put into an escrow account. Okay, let's just say by the second year, rates have come down. Okay, they want to refinance. So then all of a sudden we have a balance in that escrow account. Okay, so it's just like taxes and insurance. It goes into an escrow account. So whatever that balance is in that escrow account for the buy down gets applied as a principal reduction. So it's a win-win for the buyer.
So actually the money goes towards the buyer.
Yeah, it goes into an escrow account for the buyer. And so that monthly subsidy gets used every month, just kind of like your insurance, they're annual. If you have private mortgage insurance, it's monthly. This is kind of like a monthly distribution of the buy down. And so let's say in 2 years the buyer decides to refinance because rates have come down. They're still a little bit high at the moment. So what they can do is they can basically use the balance that's in that escrow account, and the lender would apply that towards a principal reduction.
So it's actually a win no matter what. I mean,
it's a win no matter what. And let's just say you cannot get the seller to agree to a 3-2-1 buy down because it is a little bit more costly. Let's just say we do a 2-1 buy down. That would be a cost of $9,318.48, and again showing what the difference is in the payment, the $2,570.34 versus the making the principal and interest payment of $2,057.06 at 4.375. with a monthly saving of 513.28 for the first year.
So you are actually saying, okay, I mean, I hear it more and more where people say, okay, I need financing. I'm waiting until the rates are coming down. But this would actually mean, okay, you don't even have to wait. You can say, if my seller is helping me reducing my rate, I can finance the home right away. And if the rates are coming down, I can refinance at any given time.
That's correct.
What about refinancing costs? If someone decides, okay, I need a refinancing, how does it work with you?
Well, as long as they come back to me, there's no lender fees.
Okay.
So we have no lender fees. Now, if they've set up escrows for their taxes and insurance, any outside costs would still be associated. In
Okay.
most cases, they will roll a very minimal amount back in, because when we get a payoff on a current mortgage, the current lender will not deduct any escrow money that's sitting there. They will send a check back to the customer after
Okay.
closing.
Can you give a rough number what people have to estimate in charges for refinancing in this amount? Just at least a rough idea.
I would say roughly, it depends on the attorney fees and so forth, or the title fees. But you're only looking at, I would say probably $6,000.
Okay. This is definitely something where we can say people, this is affordable for them, and they could have an easier time to refinance. Wonderful.
Yes, yes.
While I have you here, I always say ask the professional for help, and not anyone that you meet on the street. What's your personal opinion or insight about what the interest rate might do in the close future?
I will tell you, I follow a gentleman by the name of Barry Habib.
Yeah.
I'm signed up with he has a website, it's MBS Highway. I'm signed up with it. I watch the market on a separate screen to see what the market is doing, because
Yeah.
mortgage rates can change. They can go up and down several times in a day. It's not like the bond market. I mean, people are under the impression that when the feds do reduce the prime rates, that affects the mortgage interest rates, and that's completely incorrect.
Okay.
Completely incorrect. So basically the prime rate, okay, affects credit cards, the interest rate on credit cards, auto loans, home equity lines, okay? It does not affect mortgage interest rates.
Okay.
Mortgage interest rates follows inflation, and all the data that comes out, it's basically it moves with the market, okay? And right now the biggest challenge is the government shutdown. There's a lot of data that's not forthcoming,
Yeah.
okay? And then of course Jerome Powell had mentioned in his statements last week, because he had initially, it was believed that basically the prime rate would have another reduction in December. And so all the investors, as far as in the mortgage industry, they will price in accordingly. And now he was very hawkish with his statements and basically said this may not happen.
Okay.
And so that affects the mortgage. So believe it or not, our mortgage rates went up last week,
I saw that.
shortly after Jerome Powell spoke.
I saw that. But still, I mean, with this option, with the buy downs, people have a possibility to still getting finance for a decent rate. And I mean, who knows what's happening in a month? Who knows what happens in 2 or 3 years?
Right.
I
I
mean, this
mean,
is just
basically everything I've studied, Mike, we should be in the fives
in the five.
next year.
Okay.
So everything that I've studied and followed, as far as anything that I watch when it comes to the market, we do have expectations of rates being in the fives by next year.
When does refinancing starts making sense? If we stick to this example, for example, half a point, 1 point, when do you think it makes sense?
I mean, my general rule in all the years that I've been in business, 1% really makes sense.
Okay, that's when you uh, offset the costs for refinancing pretty quickly. Wonderful.
Right.
I want to state to our viewers here that we are doing these one-on-ones not for any commission that I'm getting from you. I mean, this is an industry where we cannot share any commission. I'm just feeling obligated to send people to a mortgage lender that know what they're doing. Based on my own bad experience, I have seen what's going on. So that's why I work with professional. And Diana, I mean, it was fantastic seeing you here. Hopefully seeing you soon here again in person.
Yes.
And we don't tell what you have in mind.
Right.
No. Thank you very
We
much.
will be back soon. We will be back
Okay,
soon.
perfect. I appreciate your time, and we'll see. If anyone has any questions, I will blend in your information here so that they can get in touch with you directly instead of going through me. But if anyone comes through me, I will send him your way, and hopefully you will get a couple customers that appreciate what an experienced lender can do for them.
I appreciate it so much, Mike, and see you soon.
Thank you very much for sticking with me and walking through the whole video. I hope there was something in it that gave you some information you weren't aware of. Let's recap a little bit. What you need to do is get pre-approved, not pre-qualified. See a lender and show him your information. Get the pre-approval letter and keep this letter once you go out house hunting. This letter is good for about 90 days, usual 90 days, most people do. Every 90 days you should reapply for this letter. But honestly, in this market, if you can't find a property in 90 days, something wrong with you. It's not the market, it's you. So thank you very much for watching, and please keep in mind, if you don't do the pre-approval letter first and you go house hunting without it, I have seen it multiple times. If people look up homes that they like and at the end find out, hey, I'm getting pre-approved for only 20-30% less, they never find a home. Never, ever. Because once you fall in love with a home in a specific price range, it's freaking impossible to find the same home for less money. Thanks for watching. Hopefully you like it. More information are in the details below. Again, this was Mike Schaefer with Next Home Sell in Love from the Villages. I hope to see you here. And no matter if you pay cash or if you need financing, I'm here for you. I will show you properties. And I hope to see you soon here in the Villages. Thanks again for watching and have a nice day.